Hi, welcome back to the channel. If you're seeing me for the first time, my name is Wealth Trader, drummer, and a mentor in the making, turning rhythm into energy, chart into profit, documenting purpose, passion, and self-mastery. Let's go. So, welcome, guys. This is the part two of the beginner's course. I uploaded the part one last week, and if you haven't watched that one, please do well to check it. It's already among the videos, or I'll leave the link in the description. But whichever one, please watch the part one first so that you understand where you're coming from. So, all right, so let's just go straight into the video. So, this is the part two, like I said, and we stopped in the part one at bid and ask price. Okay, so let's go for that. So, what is bid? What is ask? So, let's read and see. The all forex quotes are quoted with two price, bid and ask. For the most part, the bid is lower than the ask price. Okay, so you are seeing two prices here now. This is for sell, this is for buy, right? So what they are saying is this is the bid price, which is for the sell, and this is the ask price. All right. So if I want to buy, like for example, I've done my analysis and I'm forecasting that Euro USD will be bullish. So I want to buy. So what the broker will do is that they will give me at this price. This is the current price they will hit me in if I'm willing to buy. They will hit me in at 1.34568. That is what the bid price. Okay, that is the bid price. And if I'm willing to sell, like I've done my analysis and I'm forecasting that okay, Euro USD is going to depreciate, so they will give me this price as my bid price, as the ask price. This is the ask price, this is the bid price. So let's say for example, I went to a market, I want to buy a product. Okay, that product has a specific price, but I have my own price that I'm willing to pay, and the seller also has his or her own price that is willing to sell to me. Okay, so that's what it means. So, but in this case now, the broker quotes the price for you. So it depends on the action you want to take. If I'm willing to sell, they will give me this uh, ask price. Okay, so and if I'm willing to sell, they will give me this bid price. If I'm willing to buy, they'll give me this bid price. Okay, so that's what this statement here is saying. So you can see that the bid is lower than the ask price. So this is the bid. If I'm willing to buy, I want to buy, broker will hit me in at this price. Okay, because they assume that the current price of the quote, which is Euro USD now, the current price is what 1.34568. That is the current bid price, and the ask price, which they are willing to sell, is which they are willing to buy from you. You understand? Remember, trading forex is simultaneously the simultaneous buying and selling of our two currency, right? So if I'm putting a buy order on Euro USD, it means I'm buying Euro and selling my USD. So what the broker will do is that I'm buying Euro and they are selling USD to me. I'm selling USD to them and they're buying Euro from me. So I'm hitting on the buy order. So this is the price they are willing to buy from me. Okay, they'll buy I'm buying Euro from them and selling my USD. So this is the price that we use to hit me in. So that's what it's just saying. Okay, they say the bid is the price at which your broker is willing to buy the base currency, which I just explained, in exchange for the quote currency. This means the bid is the best available price at which you, the trader, will sell to the market. Same thing I said. So if I'm willing to, place a buy order, this is what they will give me, but I'm selling my quote currency. This is my base currency, which is the euro, and now this is the quote currency. So once I'm hitting a buy order, what is happening on the back end with the broker is I'm selling my USD. So this is the price I'm willing to sell those USD in exchange for my euro. So let's move forward. Say it's willing to sell in exchange, which the trader is willing to sell to the market. The ask is the price at which your broker will sell the base currency in exchange for the quote currency. Exactly. So if I'm going to sell, they will hit me at this price 3.4588. You understand? So that would be the ask price. And what that means is this: I'm selling my base currency to buy my USD. So what they will do is that they will sell. I'm telling them to sell my euro and give me USD. That's what it means, and they will use this price here to hit me. So don't get confused, don't get it twisted. Just have this little information at the back of your mind, because what I will do next is take you to MT4, where we'll have a broker where we'll log in a live account or a demo account, and I'll practice all those things where we'll talk about lot size and how to set stop loss. So let's just take the information step by step as we proceed. Okay, so now I say the ask is the price at which your broker will sell the base currency in exchange for the quote currency. This means the ask price is the best available price at which you will buy from the market. Another word for ask is the offer price, all the same thing. So the difference between the bid and the ask price is popularly known as the spread, which is usually the broker's commission, which is this last number you're seeing here, the 8. Okay, same thing here, 8. So this small number here is the spread. Alright, so let's go for so on Euro USD quote. On Euro USD quote above, the bid price is 1.34568, just like we saw up there. And now the ask price is what? 1.34588. So this is what it means. So here is the bid price, 34.568. Let's check. So you say what? The bid price is what? 34.568, and the ask price is what? This is 1.3458, which is 34.588. So this is it here. This is the ask. So and the ask price is 34588. Yeah. So look at how the broker makes it so easy for you to trade and trade away your money. If you want to sell, you click sell, and you will send euros. You will sell euros at 1. Because they have a specific price at that time. This price is fluctuating. So the price might not be the same every time. The price is always, but at that time, when you want to sell or buy, the bid and ask price is always it's not always remain the same. Let's look at how we sense that the US economy will not perform very well, which means the euro will outperform the USD. So, what are we going to do in this case? Please type in the comment section. If the USD economy will not perform well and the USD is our quote currency, okay, and the euro is our base currency. Now the USD, which is the United States, their economy will not perform well, just based on fundamentals. Okay, so if we perceive that it will not perform well, what will be our execution? And we perceive that we're pairing it with the euro, that the euro USD. Okay, somebody type it in the comment section. I hope you say bye. Yeah, because as an investor, as a businessman, what you want to do, you don't want to invest somewhere that the economy is tanking or having issues. For example, in Nigeria now, our economy is not really performing well, and that has weakened our naira, which is our currency. So any currency you bring to our country now has more value because our economy is not really performing very well, and our currency is weak, very weak. Okay, so instead of buying our currency, we want to buy what any currency paying with our currency. But in this case, we are using Euro USD for the example. Okay, so now we are going to use buy order. We are going to buy the euro for the US. So what we are telling the broker now, we are using what our bid price. So in this case, let's assume that bid price we saw 1.34568. Remember that last 8 there is our spread. So what we are really working with is 1.34568. All right. So that is our bid price. So if we place our buy order, that is where we'll buy from. That is the current price the broker will open our position for us. So as long as we open that position and the market start moving in our direction, we'll be making money. You understand? But that money will be subjected to the lot size we'll be using. We'll talk about lot size soon. So it's subjected to the lot size we'll be using. Okay, so let's move forward. I bet you understand. That's how we make money. Okay, so you want to spot just fundamentally now. I know it's not really easy to have those information at your fingertip. You understand? That's why we pair it with technical analysis. And for me, I'm 80% technical trader. I love technical analysis. I really don't pay attention to fundamentals. I do just to follow the news, but it doesn't inform my decision. I've tried to incorporate it so many times, like making my decision off the fundamentals, but it never lands well. It never goes well for me. So I just decided to stick with my technicals. It works very well for me, aligns with my personality, and that's what I use majorly. But I still listen to news. I still watch just to have an idea of what's going on. And once the fundamentals start lying perfectly well with my technicals, then I know that I have a very, very big edge in that trade, and I can decide to up my lot size and all that and keep my risk maybe a bit high, but not more than I can bear. Because no matter how your analysis, no matter how informed the analysis, the market will always do what he wants to do. All right. So having done that example, let's do for the USD JPY, I guess. All right. So say in this example, the US dollar is the base currency. Okay. Now the reverse is the case. Now for Euro USD, we did what? USD. Now I'm doing USD JPY. Now in Euro USD, the USD was what? The quote currency, but now we're turning it to the base. The USD is the base. The Japanese yen is the quote. Okay, so that's what we use now. We just because that's how the currencies are being paired together. So you see some currencies that the USD is the base. You see other currencies that the USD is the quote, like GBP USD, USD there is the quote. And so just understand it's just the same thing. That's one thing with Forex. Once you grab one side of the information, you are already halfway done with that kind of information. Okay, so it's just like mirror, like okay, you know this time, you just turn it the other way around and you understand. So now we are using USD JPY, the USD being what? The base currency, and the JPY being the quote currency. Okay, so say in this example, the US dollar is the base currency, and that's the basis for the buy and sell. If you think that the Japanese government is going to weaken the yen in order to help its export industry, you would execute a buy USD JPY order. By doing so, you have bought US dollars in the expectation that they will rise versus the Japanese yen. So same thing we did with the Euro USD. Okay, but in this case now, they want us to take the scenario that the Japanese government will do what? Weaken the yen. Same thing I said. Okay, so currency is weakened for so many reasons: macro event, micro event, monetary policy, inflation rate, unemployment rate, just name it, geopolitical tension, trade wars, and all that. So those are all fundamentals that impact economic and at the same time affect country's currency. So in this case, they give us example that the Japanese government will weaken the Japanese yen just to help the export industry. Okay, so that will be bad for the yen. And now we are pairing with the USD. So if it will be bad news for the yen, it means it will weaken the yen. So we want to do what? Buy USD JPY. This is how we make money. This is how you make the money. So believe me, you have to understand this. This is how you make the money. So if you are buying USD for Japanese yen, you see the chart turn bullish. So when we get into technical analysis, you get to understand trend and bearish trend, bullish trend, and you know why it's bullish and why it's bearish. So the only thing you do for yourself now is make sure you grab this information, you grasp it very, very well, and you see it. Okay, so let's go. All right, so same thing with the GBP USD. I'm just making different examples, so you can go ahead and read through all this. Okay, you can go ahead and do the remaining thing by yourself. So let me take you to. Okay, so there's one important aspect of this. So you also want to know how much you'll be making by each of these pair that you're trading, any of them that you're trading. Okay, you want to know how much the returns are. So let's look at that. Okay, so let's look at that. So please read through this and okay. So you can read all through. Read through. So when it comes to pips and pipette, yeah, this is information, very, very important information. So here we'll do a little bit of maths. I don't like maths when I was in school, but I never had to carry over anyway. I always had my way of going around it. Cramming a full semester mathematics. That's crazy. So we'll do a little maths here. Basically adding and subtraction. Yeah, so pips and pipette. So let's read what they have here, the article they have here. So, okay, so here's where we are going to do a little math. You have probably heard of the term pips, pipette, and lot thrown around. I said lot, right? I mentioned it, but we are going to do it when we go to MT4. It's not here, but it's very simple. So, but we'll use the terms, you hear it more here. So you see, here's where we are going to do a little math. You have probably heard of the term pips, pipette, and lot thrown around, and here we are going to explain what they are. Okay, what they are and show you how they are calculated. Take your time with this information as it's required knowledge for all Forex trader. It's very important, guys. Very, very important. In setting your take profit, setting your stop loss, knowing what lot size to use as relate to your account balance is very important, guys. So you say okay. Don't ever think about trading until you are comfortable with pips value and calculating profit and loss. Exactly. This is the most important part. If you grab this, believe me, you will not really have problem with managing risk and setting lot size. Of which that's where most beginners blow their accounts because they don't know the right lot size to use for their account. And as relative to the pair they are trading, they will use the wrong lot size, and in few minutes the account is gone. There's nothing that can take you back to your village so fast like Forex. Don't play. This is the main information. Okay, so alright, so let's go. Say, what the heck is a pip? What about pip? Say the unit of measurement to express the exchange in value between two currencies called a pip. If Euro USD moves from one, take note of this number. If Euro USD moves from 1.2250 to what? 1.2251. How many pip did it move? It moved just what? 1 pip. So now I'm going to do some calculation with you guys here now. So follow me, please. If I do this and I stop here, I think I'm good. Yes, I think I'm good with that. Okay, so let's see. I pray this network helps me do this. I don't know how strong it is today. Okay, I think we have something. Okay, if I stop here today, at least we've achieved something. Okay, let me enlarge my screen. Alright, okay, I'm still loading. Alright, please bear with me. Bear with me. This calculation is very important. Okay. All right. So they gave us example a price as 1 point what. So they gave us a price as, let me see if I can use this brush to write 1 point what 2. Oh, this will be bad. Okay. Let me see. Maybe I'll just use the typing. Okay. Okay. So let's just use the text. Okay. So they give us 1 point what 2250. Okay. All right. So what I'm going to do is I'm going to what's going on. So I'm going to increase this so that I can see, make it more bold. Let me try 18. Okay. So we can see now, right? So let me kind of space them. Space. Good. So now, what happened here now? They gave us example. So what you want to understand about this number that they give us is this. So you have 4 numbers here minus the pipette, which is their spread. Okay, so that one is out. So usually it's supposed to be 5. So what you see here now is 1, 2, 3, 4. All right. So what I like to do is just to number them. So I take this one as 1, 2, 3, 4. Okay. So whenever here move either up or down, I calculate it as 1. I calculate here as tens. These two as 10. I calculate here as 100, and I calculate here as 8,000. So this is what I mean. So if we have 2250 now and it moves up, if price now move up, it goes up like 1.2 space 5 1. Okay, space 1. How many pip did it move? Remember, look at where it changed. So this is 1. Whatever here changes 1. When it changed from here all the way from 1 to 10, so as it's changed, it's just 1 pip that is counting, as long as it's this last number that is changing. Okay, so this one changed from 2251. Remember, this one was 0, and that changed to 1. So it just went up 1 pip. So now let's assume that we have another one, same number. Okay, same number, 1.2 space. Okay, another 2 space 5. Okay, space. Let me say 5 again. How many pip did it went up from here? This is 12250. Now it's 12255. It just went up 5 pips. So these are how we calculate pips. Okay, so these are the price in real time. So you can see these are all the price. So what is the current price for Euro USD? So the current price for Euro USD now, as at when I'm doing this video, is 1.4. Is 1.14312. Okay, that is because they include the spread. But for taking the spread, I will take that 2 out. You see, it's changing already. So it's 1, 2, 3, 4. So it's let's work with 1.143. Okay, so we're working 1.143. Okay, so all right, so 1.143.1. Okay, so if this price move up 10 pips, what will it be? So it will now be what? Remember here we change, right? So it will now be 1.1441. So it will be what? Let me type it out. So it will be 1.1 space 441, right? Okay. So let's check. So this is 10 pips, I guess. So let's go back to the real price. Okay, so there's this measuring tool here. I'll just take it. I pray I get it. So we 1.431. 431. But help me, I get it exactly. Okay. Okay. 41. To be hard together is that 10, but it's around 11. So you can see that it's 1.4421 because it's 11 pips I'm saying. Now if I drag it too much, it will not get to 10. So let's see what we will get. We realize. Yeah, so we realize 441. Remember that was 442. That was because my hand pushed to 11 pips. So that's how you calculate pips. As simple as this. Okay, so I would like to stop here for now so that I don't get you confused. Okay, I don't get you confused because the information is becoming very, very dicey now, and let it not be too much for you guys to understand. Okay, all right, so I'll stop here for now. So remember, we'll stop at we're calculating pip. We stop at calculating pip. So when I come next, we'll do example, then we'll move to lot size. Okay, so the more the information is getting more deep, the more the video will become short because I don't want to stay too long and do plenty things, and at the end of the day nobody understand what I'm saying. So you can just go through the video again. If you don't understand anywhere, take it back, take your time, and please do subscribe to the channel. Join my WhatsApp group. The link will be in the description. My recommended broker, which is Xness, I've been using for quite some time now. They have never disappointed me. Fast withdrawal, fast deposit, and all that. Good trading condition, good spread. And I have the link in my description also. So do sign up with them if you feel like, if you want to. Okay. So and I'll catch you in the next one. So God bless you and take care. Yeah.